Is it time? Is it time? Alright, THM. Let me tell you a little story about that ticker. And that ticker, I have it on AMX. International Tower Hills Mine Limited. Alright. Let me tell you a little story of the curious case of THM. Let me start with the monthly candle chart. Alright. I had a little alert a little while back. Start by setting some alerts, my boundaries, worst case, my computer reboots, at least I have some alerts, and if the price moves on, morphs, then I get right back into it and give another view. Okay, I believe here, right here, there was a breakout on the bottom formation right here. 1, 2, 3, 4, 5. 5 months consolidation. I think this was a breakout. And look at that long wick. Woo, got sucked back in. Still a breakout for this pattern. But after that, we had a little bigger formation that got drawn out right here. And right now it's breaking out back again on this May candle right here. So there's multiple resistance levels. Smaller patterns encompassed by bigger patterns, and eventually, if we have use your imagination, more candles here, what are we going to get? A bigger pattern here, which could look like a bottom, and then after that, each pattern has their own measured move, which can run into its own resistance on its path, and then you could bounce off resistance, have consolidation underneath, then breakouts, or reversals, etc. So that's pretty much how price action moves along, trots along, morphs along. And what's interesting us is to know that there's these resistance levels, and the closer you are to the breakout level, the more they're important to you. The closer the pattern, the closer the measured move, the more probable it is of reaching than a higher, bigger pattern further away target. So right now, what's interesting me is this arrow here. What happened on the price action to get it for it to be sucked back in? Because I've been looking at these breakout candles, and let's say I'm playing right here, and I think this is a bottom formation, and I have a breakout candle. I still closed above the breakout line of 55 cents, but the wick came back all the way down. And now that's when you could use an advantage. Sometimes the advantage goes on the higher trend to see the prevailing trend, the wind, the direction it is. But if you want to know what happened exactly here, and if it's still healthy, a healthy wick, is you have to go on the smaller time frame. And on that smaller time frame, for stocks, you have the notion of volume on pullbacks. So you see here, you had the breakout. Here's this. Okay, this is May. Okay, these are the May candles. This is the last candle of April. So you see that pullback? That's the wick. I got sucked back in, and the price, remember, it closed halfway through here. Well, was a pullback on contracting volume? Okay, here we have on the weekly, doing the stand framework, we have the bona fide breakout right here. Above, let me just move that along. Let's say we're back here. Look at that. So we have a base right here, 55. Our breakout level. And then you say, oh, breakout. That's at least 4 times the average of the 2 times the average of the previous 4 or 5 weeks. All right, I'm in. That's when I usually say, okay, then you would check the RSI. Let's do it the whole shebang. Above the Ichimoku cloud. RSI going upwards. Volume 4 times twice the average of the previous 4 or 5 weeks. Above Ichimoku cloud, above a horizontal breakout line, above the 30-week moving average. Price action has already moved 40 to 50%. You could even make a case that there was another breakout candle right here. This one here. Let me add an arrow here. This is twice the average of the previous. Just got to remove. See, this is twice the average of the previous 4 or 5 weeks. So you already had a breakout here, but this one we would have not entered because of this overhead resistance. We want that to play out. So we're going to play the bigger encompassing pattern, which is going to have eventually a breakout candle above. Like here, broke out above, all that volume, nice. Could even consider that a continuation breakout, early stage 2. And let's say you would have been in right here, would have entered. Yeah, 2 choices here. Here's my speech I'm doing these days. And either you enter right here, put your sell stop, if you're an investor, below the pattern here, below round number. And if you're doing the trader's way, I would say below the 30-week moving average, below round number to protect yourself. And you would measure your position size for if you enter here and stop loss here, that shouldn't equal more than 1% of your NAV, and investors all the way down here. Now you have a choice. You go in, take half a position size and wait for the pullback, or you take your full percent and then you hope it takes off. Or you could just wait if you're patient and you say, you know what, I'm just going to wait. And I'm going to take my whole percentage size lower. Because if the breakout line's right here, the one that you identified, if you have a pullback that goes all the way down here, and you get to pick it up right here, then your risk is going to be here to here. A lot less than from here to here. So you're probably going to have double your position size, because that's going to equal 1%. But since you're going to lose less if you get stop loss, you actually get to double your position size, thus increasing your risk to reward ratio. So that's kind of fun. Plus, you know that if you went down on contracting volume, then that's a sign of a healthy pullback, and then you're set to go. So what happened after here? 1 week went by, contracting volume. Another week went by, contracting a little bit more, price starting to go down. Usually it's between 1 and 3 months, you get the pullback. Then you could say, should I enter? Okay, you could still wait. You could enter. You could wait until you have a little green candle going up, and then it pulls back some more contracting volume. And here we are today. And the volume is we did 1 day today. This is Monday's candle, started. So right now it seems to be contracting a lot. The volume, actually, this is probably a good entry point right here. Might not get back down to here. You're getting close to your breakout line. So your risk, you'd enter here. And your risk, if you're playing the trader's way, you'd have your sell stop under the 30-week moving average, probably at 49 cents. Moving average starting to go upwards. Investors, keep your stop loss down here. So risk for traders, risk for investors, all the way from entry here at 63. Stop loss right here about 44 cents. So that's one of the nice example of using a pullback on contracting volume to enter. And what's fun is you also avoided emotional landmines. So that's the emotion technique to avoid panicking. Imagine you bought here at 75 cents. A lot of people could have. It's a bona fide breakout. And then you would have down, and then you're getting close to your sell stop, and then your positions you already lost half of your 1% of your NAV. And then you can say, okay, I'm just going to pull up my sell stop, cut my losses. Whatever reason, you decide not to trust the framework, not apply it. You forgot to look for candles contracting volume. So you avoid all that. So that's another nice thing about waiting this out, seeing how this plays out. In all sports, if you have a chance to take a step back and just watch how it plays out, and then you jump at the end like a Royal Rumble in the WWE, let everybody eliminate each other, and then when you know it's safe, and you jump in, and then you take the prize. All right. So right here, I just want to back up. I keep saying that this is a bona fide breakout. This candle right here is the candle of the early April, second week of April. But I would have also went on the monthly candle chart. And let me just check if I would have April. Where's my April candle? Yeah, this is April candle. I would have waited until the candle here. We didn't have that wick. We probably the price there was all the way up here at this moment for before it got sucked back in. If I respect my trading framework, I always say the direction of the wind, the trend is confirmed once the monthly candle closes. So we could have probably not wanted to enter on that breakout candle that we saw. So it would have kind of forced our hands to wait. We had the breakout on the weekly, on the Stan Weinstein, confirmed. But since that monthly candle close didn't close at that moment, would have waited until April 30th to get that close, which gave us that wick. And then would have looked at the chart. Zoom, 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 zoom. Would have looked at that chart and would have seen the last candle of the month. Weekly would have gone right here. And then could have said, okay, that's what happened. I had a long wick. I still close above my resistance, my breakout line. But that wick scares me. Oh, price action went back down. But the pullbacks that you see in non-Marabozu candles, that means it has a wick. Any candle that doesn't have that has wicks, they're non-Marabozu candles. Marabozu, it starts from the top and closes at the top. Okay, it starts at the bottom and closes at the top. Almost no pullback on the top. Closes at the high of the day. So if you have a wick come back down, price action got sucked back in, then if you could explain it with contracting volume on those pullback candles from the intraday, the smaller time frame, then you could still use the validity and the strength of that breakout candle as a breakout. Not as good as a breakout where you didn't have it, but that pullback expressed in the wick of the monthly candle, expressed on the weekly with candles of contracting volume, is still a healthy feature of that stage 2 breakout. And there you are, guys. So good entry here. Enter here, 62, 63, whatever price you get in the morning. And then put your sell stop below 30-week moving average of your trader and investor, below the bottom of the pattern, below 30-week moving average, below round number, probably $0.44. And it could go down a little bit more again, close to 55. It's up to you if you want to wait it out, or else get in and that should go back up. And if it doesn't, well, you have your money management protocols, your risk money management protocols, and you just take 1% of your NAV and you move on for another trade. All right? Cool. That's it, guys. Thanks for watching. Ciao.